Welcome to the 19th installment of Ear to the Ground, the Land Stewardship Project's audio magazine podcast. Ear to the Ground features interviews, reviews, and field reports related to sustainable agriculture, family farming, local food systems, and local democracy. I'm your host, Brian DeVore, editor of the Land Stewardship Letter. In Ear to the Ground number 18, we listened in on a recent Farm Beginnings class where basic marketing was the subject of discussion. People who take this beginning farmer course find that innovative marketing techniques are key to making it as a successful agricultural entrepreneur. In this installment, we will look at another necessity for getting started in farming, credit. Farmers who are thinking of launching an enterprise that is out of the mainstream often find that lenders aren't exactly clamoring to give them money. Blame it on lack of information. Surveys conducted by the Land Stewardship Project show that many Midwestern lenders are not knowledgeable when it comes to farming systems that don't fall into the typical corn, soybean, or large-scale livestock production paradigm. In turn, farmers of all types, even those who are utilizing conventional techniques, often approach a lender without the basic information needed to make a successful pitch for credit. That's why the Farm Beginnings curriculum has a segment that focuses on successfully obtaining credit for innovative farming enterprises. Tim Gossman, Vice President of the Root River Bank in southeast Minnesota and a veteran farm loan officer, recently fielded questions from class participants on how to seek credit. Here's an excerpt of that session.
Some of the things you're probably interested in is how you approach a lender, how do you pick a lender. And again, like I mentioned, I'm biased toward finding a lender that's close by and in your community so he understands or she understands what's going on right there. If you have an opportunity to visit with some other farmers in the community and see what they do there, borrowing, I think that'd be very positive as well, because some banks are certainly more in tune with sustainable ag than other banks are. So you can kind of get a feel for that. If you are early in the process and have an opportunity to become a customer of a bank other than a borrowing customer for initial contact, that's a positive thing. Open up a checking or savings account, you get to kind of know people, and I think that's a good way in the door. You can, if there's an existing customer, have him introduce you to the loan officer he works with, that can be a positive thing. So just make yourself kind of familiar. And then know that probably if you're doing something that is other than raising corn and soybeans and getting a big government payment, you're probably going to have to do some education to the lender. But most of them are open to that. So there's some other things I'd like to talk about. I'll fill in the blanks, but I'm just going to open up for questions, and you guys start asking. I'll kind of follow your lead.
Is it imperative to have some sort of something to borrow against, so you have a lien on the loan if you take one?
What you're referring to there is collateral.
Yeah.
And basically when a bank makes a loan, they want their money back. And the best way to get it back is to have it come from your income and with interest over time. You know, that's everybody's intention when the loan is made. As a backup plan, the bank is going to look for collateral, and what that means is they're going to say, if we're going to loan you money for this farming operation, we're going to take security in your tractor, your land, your livestock, whatever it might be, and if this doesn't work out and you can't pay us from your income, we're going to repossess that, sell that, pay off the loan, and hopefully pay off the loan. So that is a pretty essential part of a loan. There's things that you can do to, and usually the lender's going to be looking for somewhere in the 75% range. So if you want to borrow $75, they're going to look for $100 worth of collateral. And the reason for that is when the bank goes to sell that collateral, if that situation happens, it's going to be worth less than it was to you, because everybody's going to be looking for a bargain. You can get a cosigner is one way to lessen that percentage, and there's other there's different kinds of collateral out there. So, but if without that down payment, so to speak, what you're buying can become part of your collateral. But you need the down payment to get you up to that, to get you over that 25% hurdle. So, does that make sense?
Yeah. So like if you didn't have any collateral,
right,
except for the object in hand that you're buying, say a tractor,
right,
you'd need probably 25%
down payment, right? Most likely, right?
Okay.
But that could come from equity you might already have in your home, they've already, or it might be cash that you have in hand. It might be this is a piece of equipment, you might already have the tractor partially paid for or whatever. So it's, you just put that all together and you get that percentage. Yeah. Yes?
How big of a role does experience play in underwriting a loan?
Well, that's a good question. The things that banks like, what banks don't like is risk.
Mm-hmm.
Again, they want that. They want to get that money back, and they want to do it in a cost-effective, least stressful for everybody manner. And one of the factors is collateral. Another factor is experience. The more likely, if that person's been doing that same type of operation for several years, chances are they're going to be able to continue that, and it's less risk, and they might be less harsh on the security or the collateral. So in lieu of that, you may have to talk to the banker about how you've taken this class and you've done gone through the mentoring program or something. You've gained that experience even though you might not have been doing it yourself and producing a profit over that period of time. So that can fill in some of that gaps. The other thing, you're working on business plans, I understand, and that can be really beneficial for the same reason. It may not show that you've had direct experience in doing that, but you've got a definite plan and know what it takes to get from here to there. So again, that's what they're looking for. So any question back here?
The lines of credit, do they also ask for collateral?
Yes. Unless typically if you might go into a bank and they might offer you a $500 or $1,000 line of credit on your checking account, and then they might not. But if it's anything substantial, they probably will look for collateral.
And then does that work similar to collateral for a loan?
It's exactly the same. Yeah.
Oh, and one question I have.
Yeah.
I'm lucky I already own farmland.
Okay.
And, I want to put it at the least amount of risk.
Mm-hmm.
Collateral.
Yeah, farmers don't like risk either, right?
Right. To collateralize a loan or a line of credit, can you say this portion of this parcel is the collateral instead of the whole parcel?
Right. The collateral should be comparable in size to the loan. So if you've got exceeding amount of collateral for a small loan, the bank isn't going to look for all that collateral. They just want to because if they sell, if the worst happens and you can't repay the loan and they sell that collateral someday, foreclose, whatever, they can only make themselves whole and the rest goes back to you. So there isn't any motivation for them to take more collateral than they need. They can't profit from it in any way. They just want to make sure that there's enough. So if you've got 160 acres and you're applying for a small loan, you can say, I'll give you this 40 acres or whatever. You certainly can do that. Yeah.
It's rocky sandy patch.
Yeah, right. Yeah. See, but if you're dealing with this local bank, they're going to know where the good acres are. So, right. But you may not want, you want to keep that bargaining a little bit later in the game. You don't want to be coming in saying, I'm looking for a loan, I'm only going to give you this, because it indicates a lack of confidence in your part if you're not willing to put up the collateral. So, because if you don't believe it's going to work, we probably won't either. But I understand that you don't want to risk everything because you can't tell what might happen. So, yes.
Is there any way to negotiate for a better percentage on the loan? Like, do you have any?
As far as the interest rate?
Yeah.
We don't very much at our bank. Different banks have different philosophies on that. Unfortunately, most people coming in for their first loan come out on the wrong end of that. And the theory goes for some banks that the more risk involved with the loan, the higher rate the people should pay. And if you're looking at a textbook, that makes sense. You would get compensated more when you take greater risk. Unfortunately, the people that present the greatest risk are usually the people who can't afford to pay the most. And so you get the super large farmers getting a huge break, and the new people getting paying a higher risk, and it just kind of stacks the deck a little bit. So in our bank, we don't do that as a matter of course. We have rates that are stated, and you come in and if you're applying for, if you're a part-time farmer and you need to beat by $500 for I can't think of a tractor that only costs $500. $1,500 for an 8N Ford or something, and that you're going to pay right now 7.75%. And if you come in and buy $100,000, that's not enough. $150,000 combine, you're going to pay that same percentage rate. That's just the philosophy that we have at our bank, that it's the fairest way to do it. So again, that's a fair question to ask when you go in. Is this one rate? The other thing we don't get involved with that some banks do is we try not to bargain with people either. So if somebody says, well, I've been to XYZ Bank down the road and they'll give me 0.25% less, what will you do? We'll say, well, in fairness to all the customers, you're already paying the same rate. This is our rate. We think we'll give you good service. We think we'll do everything right by you, but that's the rate.
How about credit history? How does that figure into an agricultural loan?
I'll highlight that there's a few things that we look at when we decide whether we can make a loan. We've already discussed collateral. We've discussed experience. Another one is repayment. In other words, how much are your payments now? How much is this payment going to add to it? And how much are you bringing in or going to potentially bring in with the farming operation? And let's say the fact you brought up was credit history. We look closely at a person's credit history. And unlike what people might suspect, we don't do that just to beat you up if you have had problems in the past. But there is a tendency for people people tend to do in the future what they've done in the past. So if you've had credit problems in the past, there's a good indication you may have credit problems again in the future. There's it's kind of a sliding scale. If you have a major number of collection items or a judgment where somebody's taking you to court to collect a bad debt, or you file bankruptcy, in our bank, those are those are tough hurdles to get over. And the reason for that, again, is we're a fairly conservative lender. We think we can keep our interest rates lower if we're taking a reasonable amount of risk. And if somebody's been down that road before, chances are they might again. Now, we're certainly going to talk through the situation and say, what went on here, and if somebody had a catastrophic illness or something, there's certainly reasons where people get into a situation that they didn't have much control over. And we can get around some of that. The credit problem, if you do have some credit difficulties, the farther in the past they are, the better off it is. And you certainly want to be upfront with the lender when you go in and say, this has happened in the past, this is why. If the first time you read about it is on the credit bureau report, that's not as good as if you know what's going on. So,
but what about
as
good
everything
credit?
else, honesty is the best policy. So,
what about good credit if you have really great?
Sorry to be so negative.
We have great credit. I was wondering if I walked in and said, okay, I don't have a lot of experience, but this is my business plan. I've worked, I've run my own businesses before.
Yes, good credit is wonderful for all the same reasons.
Okay, great.
If you can go in and say, I've had these loans in the past, I've paid them on time, dealt with uncertainty in the past, and this farming operation is going to be going to present uncertainty, but I made it through. Again, it helps that risk factor. I know people don't like to dwell on it, but alternative forms of income certainly help the process as well. If it's going to be start out as a part-time operation, or one spouse farming full-time, another spouse working full-time, the cash flow is certainly important, and basically the cash flow is just how much income is coming in versus what's going out, including farm income, non-farm income, and then farm expenses and personal expenses. And any of you, that do the math know that if a spouse can be employed and bring in the few extra dollars and the health insurance, that can be huge in making the farming operation work. And it's not much different if you look up and down Main Street of any small town. Businessmen are fighting the same thing with costs. So, with a business plan, a solid credit history is going to get you off to a really good start, no doubt about it. Yeah.
How fast does a bank want to see a particular project that you're getting the loan for turn a profit?
We know that farming, that doesn't happen right away, especially when you're starting up a farming operation. The minimum requirement that we have for setting up a loan is that you pay the interest on an annual basis. So A farm doesn't necessarily have to turn much of a profit, particularly when they, are starting up to do that. But that's going to be the minimum that we're going to look at. So we may not, we may be able to postpone some principal payments for a few years, and I guess we would like to see a break-even situation fairly early on and a profit within a couple of years. So, it depends. I mean, farming is so diverse. There's a lot of different ways you can get into it, and if you're buying a lot of capital assets from the beginning, you can have a cash flow that's pretty flat, but you're actually gaining equity and paying stuff off, so you can still be showing a profit. So, yeah.
Are bankers more inclined right now to loan for houses and cars rather than agriculture? Or isn't that true? In the sense that generally
there's a lot of banks. Agricultural lending is more complicated than loaning money for a house or a car. There's no doubt about that, and there's more risk to boot. So there's a lot of banks that have just don't do it. And I think as you get closer, I don't know where you guys are all from. Are you from around the cities here, or primarily? I'm guessing as you get closer, more urban, the banks, you go in and look for a farm loan, they're just going to say, we don't do that. Is that the experience you might run into? Am I right in that? Or,
We've also shared before that I know from last year's class, people who said they really have to, keep going. If you try one, you try the second one, the third one. I think you were talking about that at times. Yeah, and there's certainly nothing wrong with that. I mean, well, other than the fact that you shouldn't have to do it, but I mean, your patience should pay off. But there are certainly banks that are interested in agriculture. There is the Farm Credit Service, and they're everywhere. Unfortunately, they tend to be really focused on large operations. Another avenue we haven't talked about is the FSA. You're familiar probably with the FSA office, where farmers get their can apply for government programs, anything from like the CSP to the CRP to the regular direct payment program, the countercyclical payments, all that stuff. They also have a credit area to the FSA. And they do have some programs specifically designed for beginning farmers. And it's probably worth looking into. Well, in fact, I know it is. You have to be extremely patient and tenacious to make that work. The way they screen their applicants is by overwhelming them with paperwork. And if you can get through that, they have, I don't think that's their official policy, but that really looks to me. If you can get through that, they have attractive interest rates. They're very patient in terms of waiting for profit. The other thing is they're limited on resources. So if you get into something where you need to buy a farm and need that done in a month or two, it just isn't going to work that way. But there is areas where they can help, and they once they get with a producer, they tend to be with them for the long term, which can be very positive. So, yeah.
How does age figure in?
Not at all, really. I know, again, with the FSA, they used to call it the Young and Beginning Farmer Program, and I think it's just a beginning farmer program now, because their policy and their actions are not to discriminate based on age. That's certainly true in commercial banks and the farm credit system as well. If somebody comes in and applies for a loan, and you do the math, and you think 30-year loan, that can't enter into the decision, because the 30-year loan is just how long it's amortized, and it may or may not get paid that way. It'll get paid some way. So age can't be a factor, and it isn't. So
even the amount of collateral they might want to see, it's no age dependency.
Shouldn't be, no. If, in terms of a farming operation, you mean?
In terms of getting a loan for a farming operation.
No, the two should not be connected at all.
I know they should, and I just wondered if they were.
No, I don't know. I honestly don't think they are. I mean, we have, we're examined, and if we vary from our normal requirements, or if we turn down a loan, for one person or another, we have to justify that. So not only is it the right thing to do, but we have people to make sure that we do it. So I don't think you're going to run into that as a problem. On the other end of the spectrum, you do have to be at least 18 in order to get a loan. So that's the other limit is wide open. Yeah.
How would you know if you're in a position to needing a loan? Like, it seems obvious you ask for a loan when you don't have the money.
Right.
But if you,
That's okay, I'll hear you.
would it be wise to maybe ask for a loan while you do have the money to pay it, so that it's like establishing some sort of a relationship?
That's a good question. It is important to establish your credit history and establish that relationship with the bank. So if the first time you make a contact, you can open a deposit account, get established with a checking account, have a little bit of history that way, and then maybe borrow for something smaller. And even like you say, if you know that you could write out a check for it, pay it out of your savings account, it may be good to borrow that money, pay it back from that source, and again, to just develop that relationship. So actually, that's a very good idea. Because for one thing, if you're in that situation and you get turned down, you've learned a little bit about that bank, and maybe you need to be looking around a little bit more. Because if the first time you really need the money and get turned down, then you're in a tougher spot. So that's a good idea. Somebody back there.
With land prices varying so much, and we're in an area where land prices are escalating pretty rapidly, how do banks evaluate whether or not a piece of land is worth what's being asked, the asking price is? How do they know whether or not that's worth lending that much money per acre?
Yeah, that brings up those are really difficult questions. It reminds me about going back to when I was a ag student in the 70s, when land was escalating that time, and ag teacher said, no uncertain terms, land can only go up in price, because they're only making, you've all heard it, they're not making any more, they can only go up in price. Well, the 80s proved it can go both ways. And there's different ways to evaluate land. Is it worth what other people are willing to give for? Is it worth what it can produce? There hasn't been very many times in recent history when it could be bought for what it could produce. So the way most banks, including ours, evaluate land is to look at comparable sales in the area. And if we got the same type of land and 3 farms in a reasonable time frame and a reasonable geographical area sold for about that money, we assume that that's worth that amount of money. As we see these quicker and quicker increases that aren't based on productivity, it makes me nervous. I've been there, done that thing. So I don't know, but that's what we do. And then lenders, once they have that number in mind, if they feel that it's raising too fast, they may raise that amount of down payment that they're looking for. In other words, if that farm is going up by 5% a year, they might deviate for all their customers and say, we're not going to loan 75% anymore. We think that that's getting a little bit risky because this could drop 25% quicker than it could before. So maybe we're just going to loan 70% or something like that. So unfortunately, that doesn't make it any easier to loan, to borrow money.
As you could tell, the class participants kept Tim hopping that night. Farm Beginnings is currently taking applications for its next series of classes, which convene each fall and last through the winter. The program is also offering a series of on-farm educational tours this spring and summer. Some of them are open to the public, providing an excellent opportunity to see successful, sustainable farming in action. Farm Beginnings has recently expanded out of Minnesota and now has programs in Missouri, Nebraska, and Illinois. For more information, see www.farmbeginnings.org. That's www.farmbeginnings.org. To look at the results of a survey LSP did involving sustainable farmers and lenders, see www.landstewardshipproject.org/PR/03/030826.html. That's a long one. I'll say it again. It's landstewardshipproject.org PR/03/NEWSR_030826.html. Again, that's where you can see the results of a survey we did involving sustainable farmers and lenders. Send your comments, criticisms, and suggestions about this podcast to me, Brian DeVore, at bdevore@landstewardshipproject.org. You can also call me at 612-729-6294. A special thank you goes out to Laura Borgendale, a Western Minnesota musician and LSP staffer who provided Ear to the Ground's theme music. And a very special thank you to all of Land Stewardship Project's members who make initiatives such as this podcast possible. If you're not a member, you'd like to support us, go to landstewardshipproject.org to learn how to join LSP. Thanks for listening.